When you're buying a piece of real estate, you're underwriting it, your competition, everyone's underwriting the deal. Everyone knows kind of where this deal is going to go.
Right.
You're going to spend this much on the rehab. Your rent's going to be this much per foot or this much per year, this much per month, whatever it is. You figure out what your NOI is going to be. You figure out what your term loan is going to be at. And you basically know day one what it's going to be. Now, granted, you have to execute and you have to find the deal and the numbers could change depending on the market, but you kind of know that going forward. Versus if you buy a business, you can get in there and really say, oh, wow, I had no idea we could take this company in this vertical that we weren't even playing in.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Angad Guglani started in 2016 with one single-family house. Now he runs a vertically integrated real estate investment company, owning and managing 150 residential units without raising outside equity. Angad, welcome to the show.
Hi, thanks for having me, Sam.
Hey, man, the pleasure's mine. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me where did you start, where are you now, and how did you get there?
Sure, let's do it. So I started I grew up in Pittsburgh, but really started my real estate career in New York City on the brokerage side. Mostly residential rentals. Then I started investing in Camden, New Jersey, and have kind of expanded out to the general South Jersey, greater Philadelphia metro area, like the suburbs. And I live in Philadelphia now.
Gotcha.
How did I get there? I guess a lot of BRRRR deals.
Yeah, talk to us about that. I mean, that's kind of what you said there, in your intro, was that, you started in 2016 doing a lot of BRRRR deals. What was that process like? Can you tell us, how did you do it so that somebody else listening to this show may think about this as a potential strategy?
The first thing I did is I started out in brokerage, and I think it's a great way to start. I got my real estate license when I was like 18 or 19 years old, and I was going to undergrad in New York at NYU, and I realized a lot of students were moving and they needed apartments, so they were paying rental brokerage commissions, and I was like, wow, that's pretty cool. They're paying $3,000, $4,000, $5,000, $6,000, $7,000 in commissions each time they would move. And I'm like, wow, I could do that. So I got my license. I started doing that and started a company around that basically. And that was kind of my first foray into real estate. I mean, I learned a lot through that, but the number one thing that gave me was kind of the capital to start doing deals really, and the capital to support myself. So my first really year into it, I was already clearing mid 6-figure, like over 130, 140,000 bucks. And I was like 19 years old. So I was like, wow, this is great. And that was kind of my jump into real estate. So I basically did that for all throughout college and for a few years after. And that money that I'd been saving up is what I used to start buying real estate. So I bought my first house in 16. I actually had 2 friends that I'd partnered with at the time just because, I'd never done any buying real estate before. I said, I might as well have some friends help me. And so we did the first house together. I ended up buying them out, at the end of that year. And then in 2017, I bought 5 single family homes. These are all rehab, significant rehab, then rental, and then, refi type deals. And at the end of 2017, I believe was when I first, was able to refinance all the equity out plus some. And then I got all that cash back and was able to then just kind of snowball the equity from there.
Gotcha. And that's really the way that you've built your portfolio, is just continuing that BRRRR method.
Mm-hmm. Mm-hmm.
What are you buying right now? Have you moved into any bigger assets, or is it all single family?
No. So yeah, I haven't done any big communities the way a lot of people do. They do big apartment communities. But what I really like buying now, what we really like focusing on is I call them boutique multifamily buildings, like anywhere between like 3 and 15 or 20 units. I think those are really cool because they sell for significantly higher cap rates than like a big multifamily building. And you can go in there. A lot of times they're owned by mom and pops. And there's 2 types of mom and pop investors, right? One is just basically like just this family business, and maybe they're not as sharp to the current market conditions as someone like yourself or myself in the industry. And then there's kind of like the slumlord variant. So we like to buy from the prior, someone that's, kept up with the property, taking good care of it, but now it's just kind of, once they retire, they're in over their head because, a lot of landlord tenant issues arose during COVID that drove people crazy. So if you're a small mom and pop, it's tough for you to navigate those. So we like to buy from those types of people. And then we fix the units up, get into the current market, and operate them pretty well. I think that strategy is a lot more scalable in single family. Not because I think single family is unbelievable business, because your lent to tenancy is great. The amount of equity you can create because you'll get really good pricing on them. That's awesome. The fact that you could sell it to a homeowner or sell it to an investor or hold it, whatever. It's cool to have all that multiple exit strategies. But the issue that we've run into with the single family strategy is not lack of deals, not lack of capital, construction labor. We have 23 people in our construction team in-house, and we just cannot find enough people, even third-party contractors, to help rehab these homes. So, these boutique multifamily buildings, they need a lot less work per unit than buying a whole house, right? So that's kind of what we've moved the strategy into.
And do you feel like those particular size of units are what is just available in your area? Like, is that just a common...
Correct. Yeah. So I wish there was like 10, 15, 20, 30 unit buildings. There's just not many of those in South Jersey. It's an old area, right? So a lot of those types of like 30, 40 unit buildings, I think those were built in the 50s and 60s, and there wasn't that much building over here then. And it was mostly single family stuff that was built around that time frame. So we have these small, like under 10 unit buildings all over the place. And they were generally just big houses that were like mansions that were chopped up over the years. So we have that type of product, and we do have some purpose-built multifamily, and then we have some big communities and stuff too. But those I stay away from just because they're trading at like 4, 5, 6 cap rate stuff, and those are and stuff we buy.
Right. That makes a lot of sense. Yeah, I mean, because what you're describing there, that would you say 8 to 20 unit? That's I would think that's a very specific asset type. For your location. Tell me about this. You said you have 23 people on your construction team right now? Correct.
And that number fluctuates. We hire people, there's some attrition, but yeah, so we have a head of construction, and to him report our whole construction team, which they're all W-2. We pay for their workers' comp and do everything the right way. And they're experienced, or mostly experienced people. We have teams teams that help do the sheetrock, teams that do the framing, teams that, in conjunction with the licensed electrician will do some of the basic electric work, teams that'll help do the plumbing work in conjunction with a licensed plumber. We have basically specializations within the team, within the company of people that do everything.
And that's your own in-house construction crew?
Correct. Yeah. In-house construction.
Are you guys doing, 23 people, at this point, you said you have 160 units. I wouldn't think that's enough units to support a 23-person construction team. Are you doing outside work for other people as well?
So you're right on the fact that the 160 units is not enough to support staff that size. But the reason we have that many people, and we could hire, if you told me you had 20 more people tomorrow, I would hire them tomorrow, is because we're rehabbing so many units. We buy distressed, fix up, and then rent out long term. So right now in our pipeline, I can tell you how many we have, just homes and units that are just sitting, waiting to be worked on. We have 7 that are construction ready, 7 that are permit backlogged, and 7 that we're waiting to put in the permit. So about 21 units that are waiting. So then that makes sense why we have as many people as we have, and how we could afford to double and triple that size if we could get the people.
Yeah, shoot, man, absolutely. So 1/8 of your portfolio is in construction phase right now.
Correct, and frankly, that's actually good. I mean, there have been times where I've had 30, 35 units out of 100 and some that are getting rehab, because these rehabs are big deals, man. They take 2 months plus.
Oh wow.
They're no joke. These are most of the product we buy. Everything's average age is built in the early 1900s. Some in late 1800s. So we're talking full gut rented, like full on gut. We're taking the house down to the studs, looking at the framing, making sure it's okay, making sure the joists are okay, putting in new plumbing, putting in new electrical, whole 9.
That makes a lot more sense. I'm sitting here, thinking, okay, 21 units, like that shouldn't take that long. But this is a whole different ball game on the construction side that you're describing. When you're doing historic rehabs like that. I mean, we always said on a historic project, it's like, hey, whatever your budget is, just double it, and you might be close if you're lucky.
Yeah, tell me about it, man. It's no joke, and thankfully we haven't really. I know a lot of bigger developers have issues with I guess the materials that they're buying in bulk and stuff. I haven't really run into many materials issues. It's just been finding labor,
Right.
And I wish we had a ton of subcontractors we could turn to. We just haven't been able to find many that are most of the subcontractors nowadays want to do residential work, like homeowner work, because it pays better.
Right.
So
right. Yeah, absolutely. When you think about your company and you want to fast forward 4 or 5 years, where do you want to take it?
So personally, what I really want to do with my business career is I want to set this business up in a way where I can kind of leave the reins the next year or so, and this business will be like a regionally focused real estate investment company, because I feel like you have to be focused on one region, and the way we're vertically integrated, it kind of makes sense, where we do all our management, all the construction, all the maintenance, everything in-house under one roof in one office. So I want to kind of create this business so it runs like a machine here, and it grows organically. Whatever the available deals in the market are that meet our criteria, we buy them. We're not trying to set the world on fire and triple size in 1 year. At one point, I was trying to do that because the deals were so good in the market. Now it's kind of like a needle in the haystack strategy, where you have to look at a fair bit of stuff to find the good deals. And if we could put on 30, 40, 50 units a year, BRRRR method, I would be thrilled, and just want to pass the reins off to the team and let them kind of take over. And personally, myself, my goal is to buy businesses rather than real estate. I would love to buy small businesses and turn them around versus just being a real estate operator.
I want to hear more about that, because I think I'm with you on that, in that there is great value in buying businesses. Someone else that I interviewed earlier today, and I don't remember who it was, so I can't even tell you what episode it'll be on when this goes out, but they said, this is their conclusion, is that BRRRR is dead. They said that, not being able to predict where interest rates are going, not being able to predict the cost of financing, like they said, I think BRRRR is, if it's not dead, it's dying. Do you agree with that, or how is?
I would disagree with that. And I think it's a lot based on your market, right? So South Jersey really is a sleepy, kind of quiet market. We never had institutional capital come here. And I'm not from this area at all. It just kind of came out as a good opportunity. Living in New York, I figured this was a good place to go, because North Jersey is very competitive. It's like a derivative of New York. South Jersey was kind of sleepy. So we have plenty of deals here that you could do as a BRRRR. Now, as I'm facing, and I'm sure a lot of other people in our market that I speak to are facing, is the shortage of labor and not being able to turn units that way. But it's not like we can't predict interest rates. I was on a call with a banker this morning that we've worked with extensively last year, doing some term refinances. And he was saying, okay, you're going to be seeing rates. The last deal we closed was at 4%, which is unbelievable. And he's like, okay, now just underwrite for 5.75, 575, or like worst case 600. And keep in mind, our yield on cost on these things is like in the high, 900 to sometimes even 11 to 1200. So we have a nice wide spread. So I'm not too worried about that. I'm not too worried about interest rates going up in our market, at least.
Gotcha.
And keep in mind, like rents are rising quite fast. So even if you take a deal and you're paying 5.5%, 6% interest rate, that interest rate these are 5-year fixed terms, right? Where do you think your rents are going to be in 5 years? If inflation keeps ripping the way it is, the rents are going to go up. Hopefully they keep pace with inflation. Some in the past, they've exceeded inflation, right? If you look at the last couple of years, if they keeping pace with inflation or exceeding inflation, even if you're paying 5 or 6% interest rate, your cash flow year 2, year 3 is super generous, right? If your rents keep rising 6, 7, 8% a year.
Yeah, and I guess that is I hear you on that. I would not challenge it, but I guess the other side of that is, at some point, the renter, no matter where inflation is going, the tenant just can't afford the increases. If the economy takes a dive and jobs go away, and suddenly there's a glut, like we're at a labor shortage right now. I think that tide unfortunately may turn, and if it turns and suddenly people don't have the income to support the rent increases, it's going to be a very interesting way that plays out. But I do understand that historically speaking, yes, rents have outpaced inflation. So it's
100%. I mean, and that goes down to unit type, right? And unit mix and how you underwrite your tenants. So like we like to see, I just signed a lease yesterday in one of the units, and I like to review all the applications myself before approving them, which I know sounds a little bit micromanagey, but I found I always have a phrase that we say, which is like a great tenant can make a terrible property an amazing deal. Not to say we have terrible properties, the properties are great, but the tenant is the most important thing. Or you could have a great property that you spent hundreds of thousands of dollars rehabbing, put a bad tenant in, and you now have a terrible investment. Terrible. So anyways, very important tenants you put in. But now these tenants that we're putting in, the rent is $9.95. It's a small, like 1-bedroom apartment. The tenants are making, I think, just making minimum wage. They're making like, it's a couple. They're making $4,500, $5,000 a month. They have 4 times coverage, 4.5, 5 times coverage over the rent.
Right.
So, and these are minimum wage jobs, or just over minimum wage jobs, and one's at a hospital and one's at school. So like these are pretty stable jobs, and that's what a lot of our tenant base, they're not working at these high flying jobs that that you can really fire people from.
Right.
So that's why I personally feel comfortable with the environment going forward on the macro side.
Got it. I love it. Tell me, lastly, last topic here. Buying businesses versus real estate, what type of business or businesses are of interest to you? I know you said in a year or so you'd like to leave the reins of your company in other hands. So there's got to be something on the horizon. You say, hey, here's some businesses I think that are out there that are worth investing in.
That's a good question. And frankly, I haven't really looked at many deals on the business side. I looked at a handful, but I really think it's deal specific and market specific, right? And I think it comes down to really like, I want to move to a different area where I would love to live somewhere warm. I love golf. It would be great to live in an area where you could play more golf. And I would want to get in that area, get in the community and figure out what's for sale. And as long as a business has legs where you can figure out a way where you can grow it. I mean, most of these businesses are trading anywhere from 4 to 7 times EBITDA on the high end, really.
Right.
And you can get some sort of SBA financing on the debt side. So your return on equity is going to be much higher than it is in real estate, as long as you don't screw it up. Not to say that I'm going to have the expertise to run it great, but I'm just saying, like, if you really buckle down and try to figure out how to work this business, I think you could really do something with it. And it's a somewhat nascent industry called search funds. So I'm finishing up my MBA at University of Pennsylvania, the Wharton School, and there are a handful of kids every year that graduate from that program that do this, which is called a search fund, where they mostly go out and raise capital from institutional investors and high net worths, and they go out and buy businesses. And personally, I've been fortunate enough for the real estate to have the capital to do that myself. But it's not an unheard of path, and that's really what I find to be quite exciting.
Absolutely. Yeah, it is amazing in the business side of things how they do trade at different multiples than what your real estate plays do. So I do.
And you can grow it, right? Like when you're buying a piece of real estate, you're underwriting it, your competition, everyone's underwriting the deal. Everyone knows kind of where this deal is going to go.
Right.
You're going to spend this much on the rehab. Your rent's going to be this much per foot, or this much per year, this much per month, whatever it is. You figure out what your NOI is going to be. You figure out what your term loan is going to be at. And you basically know day one what it's going to be. Now, granted, you have to execute and you have to find the deal, and the numbers could change depending on the market, but you kind of know that going forward. Versus if you buy a business, you can get in there and really say, oh, wow, I had no idea we could take this company in this vertical that we weren't even playing in. Right. Or maybe the previous owner didn't have much of a sales staff. We could put in a sales staff. And instead of, day one knowing what your income could be, once you get in and operate this thing, you could really turn the income of that business a lot more than you could turn the income of a real estate property. Right. That being said, it's overly simplified. It could be really tough too. I mean, that's the beautiful thing about real estate is at the end of the day, like, people need a place to live. There's always going to be some sort of demand. That you could be at a company that has no demand, like your product could go obsolete. So there is risk as well.
Certainly. I love it. Angad, thank you for taking the time to come on today and share with us your story of how you've built a real estate firm, without outside equity, how you've done it via the BRRRR method, what you guys are looking at right now, and just what you see opportunity on the horizon for you personally, but also just in your real estate investments as well. Certainly feel like I've learned a lot from you today. So thank you for taking the time to come on. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Sure. They could just go on our website. We actually just redesigned it, cooperacq.com, COOPERACQ. The company's Cooper Square Acquisitions. You can email me at ag@cooperacq.com. And look forward to connecting.
Awesome. Thank you again for your time. Certainly appreciate it.
Thanks, Sam. Have a good one.